So I know I'm late on my things. I just have uploaded. They're pending. They're processing, right? So Sweet Butt Strategy 1, 2, and 3 are all on the Sweet Bobby YouTube channel. They're processing, so they'll be ready to go in just a second. And I'm so sorry. Then they blocked one of them because I played a stupid song in it. The Applebee song. Unbelievable. But that was from before I went on vacation. So the Sweet Butt stuff is the last three. Now, I have so many Zoom videos because I'm teaching so many darn classes now. If by chance you get one of these happens to be the Alabama or University of Cumberland video, I think I got the right ones in there. If I don't, just say, hey, dude, I don't want to hear your Alabama lecture or your Cumberland's lecture, and I'll get the right one on there. But I have updated them, so I just hadn't shared the thingy yet. All right, AD, negative 74. Wow, it's negative, but the market is just down just a little bit. So the NQ up just a little bit. The E-minis down just a little bit. So AD again is kind of, blah, a little negative. Opening 15-minute range was 17 to 24. It's 7 points wide. Here's the cash open. Here's a pivot point. Here's the hourly midband in blue. Cash open there. VWAP in yellow. Overnight high here. And we've breached the overnight high, and we're coming back up to it again from the overnight high. So let's see what we got down below. I always like to see, that's the overnight low from last night. See if we got anything else down here. Got a pivot point down there. What else? Nothing. I always like to see how far can we fall without having support, right? So we got support here at 45.10. We got support at 45.17. So we got a lot of stuff below us as support. Cash open, hourly mid, and this little pivot point here. So what do we got above us? We got the overnight high, right? So I look there and I go, wow, we could fly. I don't see any support and resistance above on these lines that we look at. Then we look at, let's say, a volume. I'm just looking at, Ken made a notation about volume the other day. It's kind of interesting. See what we got with volume. Come on, baby. Y'all, we got these on vacation and they're so good. Little mini moon pies. In the South, it used to be a thing. You'd eat moon pie. These are banana. I prefer the vanilla. But you eat moon pies and volume. They're pretty steady. You eat moon pies and drink the RC colas. It's good stuff. So that's our thing here. So let's go to our volume profile, which is where we really go to find out stuff. Let's go to E-minis first. Let's see what we're looking at. Frog in my throat. Come on, baby. Come on, darling. I need to close it up and open it back up. That's what I need to do. I don't want to do it here because it'll take an hour. So come on. Where's my data? Where's my data? I got a super fast computer. Let me close all these other programs I got going on. All right, here's our E-minis. Well, I'll be darned. Consolidation at the 50% line. Who would have thought that? Isn't that crazy? I mean, we draw these. I just love it. We draw these levels, a month ago, 21 days ago, and it's still important. It's still important. 41.15, 45, 45.15, 45.20 is an important level. Look, and we're bouncing around the 50% line. There ain't no surprise there. So we're a little bit above the 20, we're above the 50, and we're above the 200 with the point of control down here. Now, since we've got some TQQs in the house, we always need to look at the Qs too, right? So let's look at the NASDAQ futures. I prefer the futures to the ETFs because it's got overnight action in it. Let me take another bite of my moon pie on this thing. And a mini moon pie. Aha! What do we see here, y'all? Look at here. We're fairly priced above the 20, above the 50, and above the 200. But look at this. Y'all remember yesterday, wasn't our point of control down here somewhere? Now our point of control has moved. That makes me feel better about the NASDAQ, right? Because this is the point where volume is really, really, really comfortable trading. So I'd rather be, if I'm bullish on NASDAQ, I'd rather my point of control be here than down here, because I know price is comfortable down here. So if I'm bullish, I'm really happy that the volume point of control is there. So that's kind of cool. All right, so then we got to go look at our screwdriver. Screwdriver. Y'all think I have this all ready to go? Some Alabama students' fault. I just got out of my session with them. All right, what am I doing here? This is opening my screwdriver. You don't bring me flowers anymore. God, this thing is slow today. Unbelievable. Here we go. Let's see what our screwdriver is today. Did I share this yet? 29 days is where we got to go. That's where we are. I'm looking for the one that's 520. It's 38 away, baby. Everybody with me? 38. So now this should fill in to get, what's this? This is good. Y'all saw me put the formula in yesterday. 21, 21. This is one of those days that people get married, right? Because it's 10, 21, 21. It's 21, 21. People are so goofy. Aha. See how I got it fixed? Automatically put the 25 and 35 line in there, because the 25 and 35 line is where this thing normally is. This is where the average normally happens, and we're still outside the average. So what this would tell you is skew is a little bit outside of normal. And it also tells me that if this thing is to normalize, that the market should be going probably neutral to bullish on the SPX, neutral to bullish on the SPX. So sure enough, it went down a little bit, neutral to bullish from yesterday to today. So that's kind of our premise right now. We're kind of neutral to bullish. Now, no indication that this can't go back to 96, but it generally stays in this area. And for it to go into this area, we're going to be neutral to slightly bullish. Everybody follows how we do our little Medica fatigue. All right. Now let's open my little SPY empire. My TQQ bum bum ba bum bum ba bum bum ba bum. Which I probably should call it, instead of sweet bullets, I probably should call it TQQ empire. Let's open that up, see if that's good. Let's see the triggers for the day. While that's opening, we'll go back to our little charts. If I was day trading today, here's what I'd be looking at. My tick just dropped to the bottom. See it right there. So we go down here. The quant ticks are headed southward. Then we've got yellow on the board. What is yellow on the board? It means get bearish, get bearish, get bearish. And then we've got the individual ticks there for the NASDAQ, the Dow, the S&P, the Russell. We'll see. So let's go over here. Dr. Hugo, hi. I hit don't update. I don't know why it asked me to do that every time. So I'm looking in, I go in and I go, do I get a signal? This is what you do. You go, you open your little deal and you say, do I have a signal? Is it telling me to sell or to buy? No. So what do? I don't have to do anything. I can go back to bed, which might be nice. Take me a little nap for the rest of the day. Right. So tell me I don't have to do anything. Okay, good. Well, we'll keep this session short today. So we know our market awareness says, hey, we're kind of neutralish to, a little bit bullish, So we won't have a strong conviction one way or the other. So let's go in and see if there's any trades we need to do or manage. So we'll go to this first, and then we'll kind of look at our overall deltas. Make sure you SPY beta weight and SPY. So what did I say? I'm kind of neutral to a little bit bullish. That's good. My theta is super sweet. And I got positive vega. I mean, I can't make this any better than it is. And I'll just take my little theta decay every day. Theoretically, you should make $165 a day. We're almost there. But overall, you're going to keep 25% of your theta, right? So you're going to keep $25 plus what, 15, 40 bucks. That's what I should be making today. So I'm overperforming. All right, let's just see where our grapes are coming from. We're getting a lot of positive deltas from my TQQQ empire. And I've got 243 shares, and I've got a covered call going on that is down 38 today. Oh my gosh, I'm down $200, but you don't even care because you're still bullish on deltas. Isn't that wild? You got your macros, and I took out all of my, I think all of my one lot macros, and so that means all I've got is my 111 trades going on, and they're kicking butt. Look at that, $1,185, up $5,700 year to date. Kick it, Bob, kick it. My SPX is sucking. I put on that calendar trade, but it's there. What does it do? It gives me, it kind of neutralizes my deltas, gives me positive theta, and look at that. Oh, so sweet positive theta if we do get a crash. I'm sweet. I got my VIX hedge, doing its thing. And I got my SPY calendars, down $191. But I really don't care. It gives me a little bit of negative delta to temper the overall deltas of the portfolio. And then we got the black swan hedge, which, gives us negative deltas, negative theta. Some of those are fake, according to Ron Bertino. We'll see about that. And it gives me positive theta. So then you go, okay, well, how do I look on my old thing over here? How's my whole portfolio look? So I like 7 price slices, and I normally do everything to either SPY or the E-minis. And I'm gonna go hide simulations. So I'm just showing my positions, right? And do the portfolio beta weighted. So we see my entire portfolio, and I like to see what we're gonna do on a 20% drop. So here we are today. If the E-minis drop down 20%, I am up $76,000. Ta-da! So do I care if the TQs, crash? No, I don't care. They can go to zero for all I care. On a 20% drop, they'll be down 60%, but my entire portfolio will be up 76,000. Beautiful. And then if you want to, we can go change these from this to our groups. We've got our little groups, right? And you see how everything's doing individually if you want to. So, how's my AIM doing? I should change that now to SPY Empire. Let's change that. I mean, to TQQ Empire. Rename group. Just sounds better, doesn't it? TQQQ Empire. There we go. So I got my Empire going. My Empire since Friday, y'all, is up $2,121. Can you imagine that? I made $2,000 in 3 days, 4 days, 5 days, whatever it is. That's when I started my Empire. So my Empire's doing really, really good. And what the great thing about the sweet butt strategy, I don't know if we need to call it that, is that if at any time I get bearish, well, I've got some calls that I've sold against it, right? So I could let my calls, let's see. Say I can let my calls be called away, right? That's the cool thing is I go, hey, my calls are in the money. If I'm bearish on thing, I can just let them be called away. Where are we at now? We're probably on the dance floor. Where are we at? Good. Oh, here we are. So I'm in the money, right? Dang it, crap, dang, but we really don't even care. I got 243 shares. This controls 200 shares. So I'm still long, even though I'm in the money here. I'm not freaking because this is losing money. I'm making money on my long shares. So all I got to do is, I don't have to do anything tomorrow and let this expire and I'll get my shares called away from me. If I don't want to do that, what can I do? I can create a rolling order and we can roll them out a week and get $225. How sweet is that, y'all? But if you want to make it a little more safer, roll it out a little bit, you can go to the 143 strike. Then you pick up $164. You want to make it safer than that? You don't want your shares called, go up to 144. Still get $106, y'all. Isn't that cool? You're rolling out and up. You're not worried about life at all. You don't care that your strike is breached. You don't care. This is just added little money here. Little covered call on the shares that we got. That's why I really, really like this, right? It's really, really good play. All right, so let's go back over here and see what we got. So yesterday I showed y'all what we should do on down days and up days, right? What do we do on down days and up days? So I think our E-minis are down a bit, right? They're down just 2 points. I mean, so, what does the rule say? The rule says, hey, Bob, why don't you put you on a little So y'all, here's my 111 trades over in the Tasty Trail. Look at that. I mean, is that an empire or what? Look at that. Bum, 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 bum. And what the 111 trades do for us is gives us this sweet little grind down protection. So say the market grinds down. I mean, we've got the black swan hedge to protect us if the market goes, slowly down. But look at this, y'all. If the market just kind of slowly goes down, look, I'm up $5,000. I'm up $6,000. I say I'm at 7,000. I say I'm at 8,000. I say I'm at 9,000. Look at that, y'all. Isn't that sweet? Oh my gosh, but down here you start losing 14,000, but I don't care because what I have up here, I have the black swan hedge picking this up. Isn't that cool? There's a great little strategy in it. Well, what if the market goes up? I don't care. I'm up $1,800. If it just keeps going up on all these little positions I got here on this entire army in the micros. Is that not sweet? God, that's sweet. All right, so let's go find me one. I think I found me one. I've already traded one in this today. Yeah, I already did it, but I'll find you another one. So how do you do the 111 trade that we'll put on today? Well, you go to trade and you go to the table. Take off the analysis. So what do? You want to do a long put vertical at the closest to 45 days. So we'll go to 40 days and do a long put vertical, and you're going to make that thing 50 points wide. Now, if you're doing this on SPY, you're going to make it 5 points wide. Right? Here, let's see, 48. 7 plus 5 is 20. There it is. Now, move your strikes down to where you're going to pay $10 for this spread. So we'll move it down. It's stuck there, so keep moving it down. It's 13.25. It's 12.25. It's 11.50. It's 10.75. It's 10.25. I go one more. It's 9.75. So I probably take those strikes, and I've already put one on in this account. So I'm looking at the 44.60, 44.10 for $10. All right, so let's put it on this other account. So we're going to go out to, we do this in the micros. We do it on a little down day. If you think the market's going to go down further today, you can wait. Let's go 40 days out, and we're going to buy the 44.60. And it's great when a little plan comes together, right? And I took it off Facebook. I was like, why am I sharing this with those goobers? And I took it off Reddit too. I'm like, why am I sharing this with everybody? What is wrong with me? So we're going to go buy the 44.60. Hold your control key down. And no, 44.60, yeah. And the 44.10 we're going to sell. All right. Then what's the other step? The other step is to go down and find you a short put that's going for $20. So it'd be this one right here, right? About the 42.10. So I'm gonna hold my control button down and click that one too. Now, how many contracts do I want? Well, this is the best trade we've been doing. So I'm gonna go, let's do 3. Best trade we got on the board. So I'm gonna get a 10.75 credit. So we're looking for about a $10 credit. That's fine. So it's gonna take me $576 in buying power. I think we can afford that. So let's go with it. Ta-da! Doesn't get filled. So we'll go and we'll pay a little more for it. I mean, get a less of a credit, right? So we'll go 10.25 credit. Yeah, we should get filled. Ta-da! There we go. So we're filled. All right, so then we'll go over here and we'll give it a name. So let's see, we got an 18th, so this may be our 19th one. So we'll go to unallocated and we'll go, what's that here? Hey, wait a minute. 3. Where's my other one? Did I not do the whole thing? What did I do? Field orders. I did a 2, a 3, and a 3. Oh no. I bet I bought over something that I sold, and I did. It's going to drive me crazy. Hold on a minute. So I did the 44.60 and I did the 44.10. Where's my other little put that I sold? Where's my darn 42.10 that I sold? Is it just me that's missing it? Where did it go? Unbelievable. It says the whole thing went through. Look at that. Anyway, I got to find that trade somewhere. So here's what I'm going to do. Let me just do this. Right click, and we'll call this 11119. Add group, and we'll call this 11119. Now I'll have to find my missing option. Darn it. Oh, it's already in use. All right, so we'll call it the 20th. How about the 20th? Please don't be in use. There we go. That's going to freak me out about that. Now, what do I have here that I don't have? Let's see. I don't have anything there, so it's just that order. TQQs, oh man, I need to correct something for them. So this is my covered calls. So I'm going to move to group, and I'm going to add a group. I say I'm going to move to group, and I'm going to add a group. I say, boy, and we'll call this the, what am I, these are covered calls, right? I need to come up with a fancy name for them. All right, so we got that. Then we got our fixed hedge here. Wait a minute, -2. Okay, that's gone. So everything is categorized. All right, so now let's see if there's anything else that we need to do. All right, so I got to find my missing thing. Okay, here we go. So we got a BSH 11 complete. We'll just kind of go in and look at everything. Down $170 on that, no big deal. That's a 3.5, looking good. We've got a calendar. That's down a little bit. That's okay. No big deal. We got 29.57 days on that. We got a BSH 11th, fully formed BSH. That's down. We got a 111/17th. That's up 131 bucks. How many days we got on that? I say how many? 333. So we got 29 days on that one. Nothing to see here, folks. 111/18th. We are up 181. How many days we got on that one? And you know, the thing is, how do you manage these? Who knows? I'm just letting them expire. So far, so good. Unless I need to make a delta adjustment. So that's a 5 lot. What's the calendar 3 is down a little bit. Calendar SPX, that's one that's down big. That's the one I went in for the big Kahuna. But it gives, you know, I got positive data on it, so it's not causing me burn. 111 on the 19th, that's up $861. The crap is it? What is this? Ah, I know what it did. Look at that. Yeah, so when I sold, hold on a second. So that should be -4, and this should actually be -4, but it's +1. So when I sold or something, that's what happened here today. I want to think about that a little bit. It's too early for me to try to put on my thinking hat, think why that's not -4. So if I sold more, it looks like that would be negative, but it's positive. That's crazy. But apparently it's doing good. It's up $861. I'm up at $923 today. Something about that. Y'all got any thoughts? Let me know. 111/16 is up $156. Let's see what there's got in here. What have you got in here? Open up, Sea Monkey. Open up. There it goes. -3, got 29 days on those. Okay, good. Calendar 5, down a little bit. 111/15 after harvest, so that should be a -3 +3. That's right. 111/20th, that's the one we just put on. That is weird looking because we don't have our -3 42/10s in there because I put it somewhere else. God, that's freaking me out. There's my covered calls. Dang, I'm down $245. But it doesn't matter, right? Because these are down, but the shares are up. And, you know, I got 243 shares, and this only represents the loss for 200 shares. 111/18 is looking mighty good. What I got in there? -4. Okay. BSH 12 complete, down a bit. 111/14, up $156. I have not found one of these 111 trades that's lost money yet. Now, knock on wood, you know what that means. They'll all go to Hades now. But so far, so good. 111/14. My Empire is killing it again today. My 111/11 up $105. Have we ever seen one of these lose money? I don't think we have. I only got 8 days on that. Bobby, you're up $105. Why don't you close it? Because I like my negative delta. Uh-oh, it's got a little negative theta, but it's got positive vega. I don't like the negative theta on that. Should I close it? Should I? Should I just close the one that has the risk in it, undefined risk, and take my 98% $200 profit and just leave it alone? So, I mean, all kind of options you got with this, right? Use your own judgment. That one's up $158. Just sweet trades. Look, $154. I like that better than selling the daily short put. I'm telling you, I just love these things. All right, my diagonal BSH, which is kind of not a diagonal anymore because I made it a regular one. And I've got 10 puts there. BSH after harvest, nothing to look at. On my BSH9 complete. Uh-oh. That's after harvest. I need to change that. That's after harvest. Rename my group to after harvest since we completed that. Harvesting by Farmer Bob. So, you say, oh, Bob, you're down 475. No. The whole trade's not, because I've already taken the harvest, right? I've received the credit from the harvest against this P&L. So this basically thing should probably be a break even. BSH 10 complete, up $72. The Frankenstein is still not complete. You know why? Because I'm waiting for a big down day. We hadn't had one. So, I need to sell another put here. I need a big down day to do it because I've already got my 5 longs and I need 3 shorts. But if I don't get it, that's fine. But I'm waiting on it. So that lets me get a little more positive deltas if I need it. The VIX hedge, we know, does nothing. It is designed to lose money unless you need it. 3% of your portfolio and unallocated. Ta-da! Up $72 today. I mean, I don't know what else today. 111, market's up. I told you what to do, market up. So market's up, that's when you could sell calls. But the market's not up in the ES, is it? How much is it? Let's say we're down just a bit. No, we're neutral, right? I think that's it. Nothing to do. Go Sleigh. Let theta work for you at the first sale. And let your stuff work. It's kind of a simple program, isn't it? I kind of like it. Let your TQs do their thing. Let them make your money as it goes up. Sell calls against it for free money. I call it free money. Put your VIX hedge in. Put your 111s in. Do your calendars in SPY. Do a calendar in SPX every now and then. And do your Black Swan hedge. Ta-da! Let's see what the 420. Oh, that's it. Let's say the 40-20. 10 puts that you sold were taken from the 111 group where you have 4 crap chance on the other puts. This is why you have a group of 4.1. That just freaks me out. I mean, it's one of those things I have to get in the fetal position in the bathtub and just bang my head against the wall and go, what does it mean? What does it mean? What does it mean? But you give me a good starting point of reference. Okay. Any questions about sweet butts? It's what I'm running. It's kind of something. Now, I think with the sweet butts thing, I kind of took out my broken wing butterflies on SPX. I mean, remember we were doing those? I took those out. I don't think I need those. I just like doing you can add to this if you want to do your MES sell a 10 delta put. I mean, that worked really good for us, right? It's a good trade. And it's really best to do those on a down day. So it's slightly down today. So you can sell a put, in your micro put thing. But I don't know that I need to. I mean, I could, because my deltas are, kind of flat, right? And if I'm neutral to bullish, I could beef those up a little bit. So I guess I could do that. And someone suggested at some point doing it as like if you're going to sell that put, use that put as part of your 111. Yeah, Dr. Hugo says, same here, no losses on that. I mean, so far, so good on the 111. I mean, it's been the biggest trade on the board. Look at this. I mean, in the micros, now this includes everything. I mean, we made $5,700 this year, just on the micros. Here's why I abandoned the other thing. Look at there, we've lost 5,000 on SPX this year. And a lot of that's with the broken wing butterflies. Some of that's because of my inability to let them, do what they should do at expire, closing them early and losses and stuff. But I don't know. That's kind of like what we got here. So will I sell? Or do I even need to add the micro put component into this? I mean, it works, but I'm just liking this 1-1-1 trade better. Now let's go back to Tasty Works and just show you what we've got over here. Again, I kind of like it, right? So we'll go MES, go to the curve and analysis and look at all of our positions. I mean, that is sweet, y'all. Look at that. Let's clear that board right there. Just look what we got. Look at this mountain. Y'all see that? Let's make it where it looks big. Look at that mountain. Here's the price of the micros right now. Dude, we are up 1,800 if we keep going this way. Go, baby, go. But we really want the market to go down, don't we? Look at this. I mean, I go through it again. We're up $9,000. At expiration, you let them all expire. And the price goes down here. I mean, geez Louise. And that's why I really like this. It just kind of, you kind of look at your portfolio and then you go, well, yeah, but the black swan hedges pick you up down here. It's just a cool little strategy. It really is. Is it the greatest strategy known to man? Probably not. Will I receive a Nobel Prize in economics because of the strategy? Probably not. But there's probably some hole I've left out. I'm just some old dude sitting in Bowden, Georgia in the 30108, just kicking around with my farm animals and trying to catch my ducks and trying to feed my rabbit. And what do I know? What do I know? I'm just no plowboy. Not a playboy, but a plowboy. But doesn't that look good? I mean, when you start looking at your positions in whole and you go, look at the monster we have created. It's powerful. We got a little mountain over here. It looks like Santa Claus and his sleigh, right? Here's Santa and here's Rudolph with his nose so bright. And then you got the sleigh in the back. You got all the goodies. Well, I call this Santa's sleigh. And that's what we're building here. And notice what this looks like. What have we built in effect? You remember we did the space trip trades. You remember space trip trades, right? Space trip trades look like this. Right? That was a space trip trade. And we did it in the ES. Remember, we had to do all those contracts, BS and everything. It was a big old thing. You just let it build. I like doing this. Rather than doing one big trade, we just kind of leg into these, right? As the market goes down, we kind of put these on. And in effect, we've created the same thing, right? It's got a sleigh down here at the back of Santa so that when the market goes down, we're going to be good. And the cool thing is this one is not dependent on volatility going up. So remember when we test the black swan hedge, we're always like, oh, we got to raise the volatility so we can see how much money we're making. Well, we don't have to do that on this. I mean, this is here, you get this today if we go down here. If the market goes to 40.80, you get this profit today, right? You don't have to wait necessarily. I mean, you're getting a large part of this today. So you don't have to wait for the volatility to kick up and to make this work. That's kind of what I like about it. So let's look at our black swan hedge again. But it's kind of good, right? So let's say you're managing a fund for someone, and you're managing their money and you go to the Analyze tab and you say, it's kind of like show you what our hedge looks like. And they'll go, hedge? So you're like a hedge person? What is a hedge? And you go, yeah, I'm a hedger. And you say, I want you to show what happens if this market collapses. And you go, okay, I'm gonna hide these. You got to know how to show them, right? So if you're showing your mama and you're managing mama's money and she thinks you're, turd head, like my mama, I'm like, mama, you need to let me manage some of your money. Mama's like, no, Bubba, I wiped your ass. I ain't letting you, somebody that wipes your ass is not going to let you manage their money, right? Oh, crap. So here's my little price slices, the way I set them up. 5 up, 10 up, 15 up. 5 down, 12 down, 20. That's the way I like it. So I like to see what happens if I go 20% down. So right here on my ES, it says, hey, Bob, for the day, you make $12,000 on a 20% down. Ta-da! But this doesn't take into effect volatility. So instead of $12,000, I have to estimate where I think volatility will be. Where will the VIX be if we're down 20%? And I think it's going to be between 59 and 74. So if we go down 20% in a big move, we're going to be up 104 to 150,000. Sweet, right? For trades that really we're putting on for free, we're putting our hedge on for free, right? We're trying to get this to where we're making a small credit or free. Now, every now and then you see me have to buy a full tranche to pump this up, just part of doing business. But when you've got something really bullish, you know, like TQQQs making you $2,000 in a few days, well, you can use some of that money, right, to put your hedges on. So the hedges look really, really sweet. Really, really sweet. All right, Bob, but then again, you got to keep in mind that whole portfolio, right? As your whole portfolio looking. So here we're looking between 24 to 64,000. I can take that. See, that's portfolio management, y'all. That's what you go, man, you mean I do my bullish strategies and still protect myself from the downside? Yeah, that's hedging. That's what a hedge fund does. So you are your own hedge fund manager. And how awesome it is to be able to come in here and to do that. Started my sweet butts today already up over 2,000. Hey, listen, look, hey, Rod, that's awesome, dude. Awesome for you. Keep in mind, I never on these videos, and I'll probably get sued one day by somebody and they'll put me out of business and I'll be homeless with my 5 kids taken up by the Department of Children and Family. But, you know, no guarantees on it at all. But it looks like a really strong program. It's kind of boring. Not a lot to do. So for you guys are, you know, working the 40 or the 50 and doing the hourly daily commutes and in traffic, and you hate your job and you hate your guts and you hate your jobs and your boss and all that crap you got to worry with on a daily basis, man, I can't think of anything better. Just slow and sweet, baby. Put you whatever percentage you want to put in the TQs and then build your hedges. Do your 111s. Do a calendar on up days when the VIX is down. You know, as much as you want to do. The 3 recent videos on your YouTube channel, is yesterday's video recordings one of those? Yes. So Enrico, what I called them is I called it Sweet Butts Part 1, Sweet Butts Part 2, Sweet Butts Part 3. So what we've done so far this week is just doing the Sweet Butts portfolio. Now, keep in mind, you don't have to do TQQQ. You don't have to do any of that. You can do half TQQ and half UPRO, or, you know, whatever suits you jolly. It's just that when I went back to Portfolio Optimizer, or Portfolio, what's that thing I went to? Visualizer, right? Yeah, so here's the 3 videos right here. So they're on YouTube, ready for you. So let's see, Portfolio Visualizer, which is so cool, y'all. Portfolio Visualizer. I love this little thing, you know. So let's say back test portfolio. So say you have small accounts, say you had $2,000 back in 2010 when this thing started, and I can keep 1985 there and it'll still start at 2010 because that's when the TQQ came out. So you got $2,000, right? And you say, hey, Bob, tell you what I'm gonna do, baby. Back here, I'm gonna put 80% of my 2,000 into the TQQs. 0.8, that's 1,600, right? So you go, I'm gonna go TQQQ, 80%. Then I'm gonna go cash. Cash, I say, cash X, cash X. I'm gonna do 20% there. And I'm just never gonna rebalance. I'm just not, my plan is to look at it in the year of our Lord 2021. Okay, rebalance annually. Where's the year-to-date stuff? Year-to-date, yeah, we won't say how we do it year-to-date this day. So you go analyze portfolio. Ta-da! So your 2,000 is at 84,000. Are you happy? You dang well should be, because your return is 41.69% a year. Your best year was 111%. Your worst year was negative 15%. Hey, let's compare this to something else too, because some people say if you'll read the hedge, what is it, the hedge fundio or the hedge fundio portfolio. Have y'all read that? The hedge fundies excellent adventures. That's what they do. And so what they do is put half of it into UPRO and about half of it into TMF. So what if we did that? What is TMF? So instead of doing the cash, let's remember this number here. Let's do a little sneaky. We'll do a little snippy, Mr. Gaines. You won't have to worry about children ever again. So what if you had done the hedge fundio or hedge folio, what I can't even say. So say you're going to start back and you're going to go, well, I better start this. Well, here we go. And you're going to go TMF, which is the 3X 20-year treasury bull, right? Little bond fund. Well, how would you have done there? So if you want further, I guess diversification, instead of going to cash, you could go to bonds, right? In a 3X leverage account. Let's see how that does. Ta-da! Oh, wow. Check it out. Better than cash, baby. If you don't want to hold cash, you could maybe put the rest of your portfolio into the bond fundio, maybe something like TMF. So you would have taken your 2,000 to 113,000, and instead of 41, you got 45%. Standard deviation there. Let's see, best year 114, worst year was 15% here. You see, you had a worst year here. Maximum drawdown here was 42%, a little more, and you had a 41% if you bring cash. Isn't that cool though? Cool. So you got options, right? And this portfolio visualizer kind of helps you to go back and to look on how different portfolios would work. And then the cool thing is you can optimize it, right? I like doing that. Let's go to that. So you go down here to portfolio optimization. So do it by tickers, year to year. Let's do 2010. That's when TQQ went out. So let's say you're going to, I don't want to do it by Sharpe ratio, maximize return, subject to however much volatility, and I put 50 there, right? So you're willing to say, I'm willing to go down 50% of my portfolio because you don't have your hedges and all here. So you go TQQ, oh, you go TQQ, you say, man, let's do a little bit of UPRO, and let's do a little TMF, and let's do some cash, and let's figure this out. And we're going to cash. You get all your little tickers in here, what stuff you're going to do, and you go, okay, here's what I'm going to do. I'm going to do 80, I'm going to do 70% this, and I'm going to do 20%, no, 10% UPRO. Give me a little bit of diversification. Then I got, that's 80% of my portfolio. So I got, let's do 10% in the TMF, and let's do 10% in cash, so that everything equals 100. Right? So you go, that's my test portfolio. Hold on, so paired allocation. Let me do this. We'll do equal weighted benchmark. No, let's do this. Yeah, let's leave it there. We'll go benchmark. It's going to be Vanguard 500. Yeah, now run this thing. Right? So you say, test my portfolio out. So here it is. Here's your portfolio. Now it comes back and says, hey, tell you there, Bob, but I found something that is even better than what you got. So instead of your 70, 10, 10, 10, you should have, if you wanted to maximize this thing at 50% volatility, you should have went 100% TQs, and you'd been much better off. Then it also shows you what an equal weighting of those would be. So let's go look down here. So here's my 70, 10, 10, 10 portfolio, right? And it shows you that you got 464,000. Congratulations out of you. You got 42% return. Let's look at your max drawdowns, 39%. Well, down here, if you go to their maximum portfolio, if you want to maximize your return, 100% of TQs, at one point you had a 49% down move, which was in February to March 2020. You lost 49% of your account. But see, what this doesn't take into effect is we had a hedge that's not represented in this back test. Then it shows you what would happen if you had equal weights, right? You 25% for some of those of you that are more comfortable. You would have only had 146,000. So that tells you that's a terrible portfolio. Well, yeah, but you only had a max drawdown of 23%. But then you look at your overall return, 28% compared to 42 or 50. How did you do against the S&P 500 though? That's always interesting. Look, dude, you killed the S&P 500. You killed it. Even with an equal weighted portfolio. Look at that. You killed it. Killed it. Even with this one, y'all, look at this 52% compared to 15%. Yeah, you only had a 19% drawdown here. That's important to you. Look at here, the one with the highest Sharpe ratio. I mean, if you believe in Sharpe and Sortinos, then the best portfolio for you would have been this equal weight, right? You're not taking near as much risk. You only had 23% drawdown compared to 39 and 49, but you only come up with 146,000. But notice, I mean, if your benchmark is the S&P 500, I mean, you just killed it. Look at this. And look, with this portfolio, the S&P itself was down 19%. Your much more risky portfolio with 25, 25, 25, 25 was only down, what, 4% more? And look at the Sharpe ratio. The higher the Sharpe, the better. The higher the Sortino ratio, the better. You killed it. So what you could say is, shh, I want to do something much safer than Bobby, and it's still going to kill the S&P 500. And you go, man, that's me going forward. So get you some UPRO, TQQ, go to cash, and get you a 3X bullish 20-year Treasury bond. Ta-da! Hallelujah. And you don't pay any dime to managers and financial planners and accountants and brokers. Well, we'll pay our little broker fees, but think of, these things have expenses, right? All this stuff has these little expense ratios, but trust me, on TQs and UPROs, I think it's worth it, right? To get the leverage that we get, you pay 0.75 or 0.95 expense ratio in there, but my gosh, y'all, to outdo the S&P 500 like this, pretty sweet. So you want to change your years. Well, how would I have done if I started this in 2000 compared to the S&P 500? You do all that kind of stuff. It's just kind of cool to go in here and to test that under Portfolio Visualizer. Now, I know what you're thinking. How much does it cost to do this Portfolio Visualizer? It's free. Just go to Portfolio Visualizer and you can sign up for a little free account. I say I'm not even logged in, and I'm able to do all this. And this is just great, y'all. So you can test all different kind of portfolios. But, keep in mind, they always say bulls make money, bears make money, fat hogs get slaughtered. So if you were the fat hog that did 100% TQQ, you got slaughtered in February, March 2020, where you lost 49% of your claim, right? You would have been much better, only losing 23% by doing this, and still doubled the return that you would have got on the S&P 500. I mean, that is just, can you imagine? You think about the number of money managers out there. You got Kathy, what's her name, Wood, and you got all these folks out there, and all they're trying to do is to beat the S&P 500 so that everybody will kiss their butt and, talk to them at cocktail parties and all that kind of garbage. And you don't need a Kathy Wood. You don't need somebody. You don't need to hire people. You just need to go put something in an index fund or a leverage fund and go with it. Just go with it. It's kind of sweet, right? I mean, how do you beat this portfolio? I mean, it doesn't look good when you go over here and you look at the fat hog stuff. Geez Louise, I could have had 464,000 or 18. But when you're saying all I'm going to do is beat the S&P, you can do it quite easily right here with that 4 asset makeup. Ah, that's cool. Anybody excited beside me? It's almost like I got chills. Everybody good? Matt, y'all be feeling good, man. What's the problem? Matt, are you working today? What's that? What's the deal?
I'm in the office.
Okay, I got you. That boy ain't gonna be in the office one day. He's gonna be sitting behind his desk, sipping a mimosa, putting on his TQQ trades. All right, any questions at all? Am I too excited about this? I hope I am. I'm gonna shoot them down, shoot it down. But the cool thing is, if you want to do more, you don't want to do the same 80-20 that I'm doing, go something else. Do something else. Mess your allocation up a little bit, change it up. Do the 25, 25, 25, 25. You imagine? Think about it this way. I mean, really, if you had 25 in bonds and cash, and you're doing 50% of your account in, pro shares and TQs, well, you probably max loss at any given time would be 50%, right? And that's if the whole thing just blows up. You don't lose 50, you still got 50% left in your account. Isn't that kind of cool? But then you got all these hedges that we're doing and teaching you. You got the VIX hedge, you got the black swan hedge. I think we got a pretty good little setup here. Then you see how the portfolios, behave.
Are you still doing Lucello's system in this as well?
Oh, absolutely. See, that's what even makes it better, right? So this thing balances, every, I think, annual. But yeah, we're still doing Lucello. So Lucello is even going to help us more. Matt, did you not see the you may have not saw the back test I did. Let me show that. Let's pull this thing up. It'll take a second or two. I think you'll think this is pretty cool. I did this painstakingly. I began it on my vacation when Beth was like thinking about holding hands and walking down the beach. And here I am working on spreadsheets and crazy sweet butts adventures. That's just what I do. I kind of do believe that this Coke Zero Sugar is better than the Coke Zero and the Diet Coke. It's kind of good. And when you put it with a moon pie. So check this out, man. What I did is I said, okay, what if we had started? And I went to Yahoo Finance and I got the split adjusted S&P. Let's see. Okay, that's right. Awesome. Rod is doing 75.25 on a $177,000 account. Awesome, dude. That is awesome. Oh, and I'm about to get my, I retired, so I'm about to get my 401k or thrift savings plan, and I'm gonna run it on this baby. I'm running with it. I can't wait. All right. So what we did, Matt, is we went back to when TQQ started in February of 2010. And we had a $50,000 account, right? And what we said was we're going to put 80% into TQQ, 20% cash. And I did zero rebalancing until 2014. At the end of 2014, I went much more conservative. At the end of 2014, I put half of my money into TQQ and half into cash, not bonds, not anything, just regular old blah, 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 blah. So let's look at this now. So I didn't rebalance anything until 2014, and I did a 50-50 rebalance. So here's the cool part, y'all, that is amazing. So on my AIM activity, Matt, I started off with 46,000 shares. Now, y'all keep in mind, I started off with 46,000 split adjusted, dividend adjusted shares, right? So it wasn't really the price, but I put $40,000 account. This is something y'all got to remember. And the other day I took a snippet of it. Let me take another snippet of it so y'all can see the power of the Lucello system. We bought 46,000 shares. Okay, so let's go to Lucello and see how we did. And this is how Lucello did. Lucello took us at the end of 2010. We had a 57% return on an 80-20 portfolio. I'm with that, y'all. Could you live on a 57% return? Yes or no? Okay. Now remember, what does Lucello does? Lucello has a sale as prices go up and book the profits and convert it to cash. As price goes down, Lucello has us to buy and accumulate more shares. So we made 57% at the end of the first year. 2011, we didn't do too good, y'all. We're at 59%. Dang it, we only made like 3%. Crap. But we were doing good, right? Until that month, we lost $4,000. Okay, I'm good. So we're at 59%. So how do we do at the end of 2012? 2012, we're at 107%. So that's 3 years, right? So we're making, what, 33% a year now? We're feeling pretty good. So what's these little things here? What do we do at the end of 2013? We're at 190% with the Lucello method. Okay, I'm getting jiggy with it. All right, 2014, and I did these numbers painstakingly one by one, y'all. Every month I'd adjust this thing. 2014, we are at not 190, but now we're at 253. So we made what, about 60% this year. I'm jiggy with that. And I'm rebalancing too, right? So now I'm putting half in cash, only half in TQQ. Can you imagine if I rebalance to 80-20? We don't even want to think about that. But as I get older and wiser, I get more conservative. So we're at 253. So let's go to the end of December. 253 to 290. What is that? 30, 50, yeah, 37%, right? Can you live on 37% a month or a year? That sounds pretty good to me. So we're at 290. Now to the end of 2016, we're at 328%, y'all. So we made 38% that year. This is not looking bad. And remember, this is only 50. You've got 50% of your cash or account in cash. Okay, how about 2017? Let's see how we do here. 502%. You kidding me? You filthy pigs, you capitalist bastards. What's wrong with you? So let's go to the end of 2018. 487. Crap, we went down a little bit. Life happens. All right, so now we're at 487. We just lost $35,000 in. But now, if you were investing back during this time, I lost a lot more than these three numbers combined. I remember. And so you're telling me I only lost $78,000 on a $293 account? I'm okay with that. I'm still at $487 in one of the most difficult markets where I lost a ton of money back during those days. I remember how hard that is, and I'm still at 487%. Cha-ching, I'm in. So now let's go to 2019. 2019, where are we at? Into 2010, 11, 12, here we go. We're up 848%. 848%? Kidding me? All right, well, let's go to 2020. Now remember, 2020 is the Corona freaking crash. So we're up 848%. So we go from 848 to 654. Dang us, we lose 42, over $100,000 in these 2 months. Do I care? My 50,000 is still at 377. I'm at 888, 803, 654. Crap, I lost money, but I'm still at 654%. Keep on.
Bobby, where's that spreadsheet again?
This one, it's on Google Drive. I'll share everything here in a second so y'all can get all three of these, okay? So check this out. Now we go to end of 2020. You filthy pigs, you're at 1,470%. You got 785,000 in your account. Let's go all the way to this Monday, I guess, when I finished it. You've almost got $1 million. You're at 1,760%. Now, Matt, here's where I'm going to do the mic drop. Here's where I do the mic drop. Remember, you started off with, let's do it again. You started off with 46,000. Where's my snippy? Where's my snippy? I thought I snipped it. Here it is. You started off with 46,000 shares. How many shares do you think you're holding today, Matt, on October the 18th?
Not as many.
2,103. You have $637,000 of cash and $293,000 of stock. You don't care if this goes to zero. Look at the cash you built up under Lacello. So your account now is at 3268. Is that amazing? And instead of holding 46,000 shares, which would be tremendous risk in the portfolio, Lacello has taken us down all the way to 2103. Gosh, that's great. I mean, that's just sweet, y'all. I mean, that's the mic drop. Putching. Now, it'll make you sick if you go back to portfolio or, the thing and go, okay, let's start it out 80-20 and run it like I never sell anything. Then your account's going to be up over $3 million. And you go, oh, man, you just made $1 million. I did $1 million, but a lot safer, buddy. Right? I did it a lot safer because I got all this money. At the end of the year, what do? You redo this. So you go here, you go, and I've even built you a thing here. So let's say you get to December and you go, okay, I need to make this 50-50. All you gotta do is change this number here. Look at this. I have built it for you. You ain't gotta do nothing. So let's say you want to do 40% stock and 60% cash. It tells you exactly how many shares you need to buy. Is that not cool? I want to be 50-50, Bob. Okay, well, at the end of the year, buy 1, 2, 3, 4 shares. Well, I'm gonna be, I'm going back to 80, baby. Okay, buy 3,236 shares. Tells you exactly what to buy. Isn't that cool? What's this? Let's see. Do you look at the spreadsheet once a month to see if you buy or sell? Do you look at it once a week? I'm one of those weirdos. I look at it every day. Doesn't mean I'm gonna necessarily make the adjustment if it says it every day, but I would,
Dad,
set your frequency.
What I just caught.
Hold on just a second. What did you catch, baby? Oh God, what is that? A little bird?
Yeah.
What kind of little bird? Well, you gotta
It
let
was
it go.
stuck on our porch.
Oh.
It was too tired. It
Hey,
almost.
show everybody in the camera what the little bird.
Where?
That's right here. Stand right there. Oh, well, go let him loose and make sure he fly. And don't let our dogs get him, okay? That is cute. But don't let him in the house. He'll get killed by the ceiling fan.
I know. Teddy almost caught it.
All right, well, let him go.
It almost passed out because it was too tired. It was stuck on our porch.
What are you doing home? You're sick, right? Oh, she threw up the school. Okay. All right, so I'll provide a link to all these things for you. All right, any other questions? Yeah, I mean, check it. I think Lucello finally decided, hey, do it once a month. But now keep in mind, I've got you the technology that you can check it every day. Now you can open this thing and it will automatically tell you what to take action. So you want to make sure that the one that I share with you, this one does not automatically update, right? This is the back test. So don't use this as your template. Use this one as your template, the TQQ Empire. So to start it off, all you got to do is say how much money you're going to put in, right? And do your contribution the same amount. What's your account value starting at, right? And then go in and figure out how much shares of TQQQ you're going to buy, and make sure you say yes here. This is new balance, new capital, yes. And then let this thing run. And this hooks up to Thinkorswim. So you do have to have Thinkorswim open to get the price here. Or however, if you want to get it from Google, whatever, you can set it up to do that. There's a way to do that. But I just get it from, and then so this will keep updating. And then it'll tell you what to do. Now, Ken and I were discussing the other day. You remember I built the governor into this? I'm not using my governor. It did not work. My governor did not work. It was too conservative. So what Lucello said, hold on a second, let me go back so we get all this. What Lucello said is this. He had a problem and he said, I was soon inundated by a flood of new money that's raised my cash reserve to levels nearly equal to my stock value. And this is such prosaic investments as blah, 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 blah. No wonder it screamed for Valium. He said the cure took another year to develop, and it's simply this: make sure your minimum purchase or sale equals 10% of your total stock. So I was like, oh crap, I got to go back in there and do that. So I went through all the formulas again, and I go, can you believe I already put it in there? So you don't have to put in that governor. The governor's already in there. Now, so that means you don't have to look at this governor on the right. It doesn't even matter. I like to see how many buys or sales I've done in a row, but all of this is no longer important. Cool stuff, huh? All right. Any questions? And I'll make sure I share all three of these spreadsheets. So you three. I'm gonna do the screwdriver with the little this, which is kind of cool. All right, questions? Everybody doing good? Hope you are. I'm kind of excited about this. All right, good. Then I will see y'all tomorrow.